Well, good morning, traders. This is Blake, and you are listening to the F.A.C.E show. Yes, Dale is out of town. He wasn't sure Friday if he was going to travel. He was going to visit one of his, just so you all know, he was visiting one of his childhood friends, and he wasn't feeling too well on the way out. And I'm like, you know what, you are not going to want to miss this trip. And so I did reach out to him on Friday just to ensure that he got on the plane, and he indeed did. So he is gone. He's going to be gone. Excuse me. He'll be gone for the week. He'll be back this next week. But just want to let you all know, I'll be stepping in, and then not just me. I've got the team here. Even Stelios being sick is here this morning, and Ryan, good to see you.
Morning, mate.
Good morning.
And hey, Stelios, save your breath for a moment. I will definitely bring you in a little bit later. And Steve is here as well. Hey, Steve, good morning. Well, he might have stepped away for some coffee.
Sorry, I was muted. Good morning.
Oh, good morning, Steve. All right. Hey, are you back from the beach, or are you still on the beach?
Still on the beach.
Oh, good for you. All right. Steve sent me a picture this weekend. He said he's on the beach, and I was like, man, I have to admit I'm jealous. Anyway, hey, let's get you guys caught up on a few things. And I'm going to be pinging Ryan here in just a second, because he's obviously been awake and around. Well, actually, all three of these guys have, but paying attention to what's happening in the markets. But a lot of it's going to be a really big week, and you can see the dollar is already, challenging some pretty key levels of support. I mean, we've got the euro back up at 112, sterling holding channel support, overnight. But yeah, you can see the euro back up at 112. More importantly, though, we've seen some really big moves coming out of Asia. Obviously, with the Chinese markets, the Chinese markets have continued their rally. People are all, talking about how it's now entered bull market status. You can see how it's actually broken out on the China 50. We've rallied more than 20%, and so now the Chinese bulls are coming out of the woodwork. One of the things that I don't know if you guys caught it, I'm sure you did, but over the weekend there's been some heightened tensions in the Middle East, and Hezbollah's leader, what's his name? Ryan, do you know it right off the top of your head?
No.
I'll find out what is Nasrallah had the leader of Hezbollah had been killed, and so I don't know. It seems pretty to be balls out long right now. It seems a little crazy, but we saw a reversal in crude, or not in crude, but I will come to crude here in a second. We saw a really big reversal in copper from the 618 retracement, and you can see how that gap up this morning. And I would assume that the gap up was just some over the weekend buying on China, all this positive news. But we saw a really big reversal in copper, and that's a bit of a warning as far as I'm concerned, because A, is at a 618 retracement. B, it was above resistance, so probably stopped out. Anybody who was short maybe going into the end of last week probably just got stopped out on the gap up. And once futures open, and we've reversed quite aggressively, and that reversal, this, just take this into account too. That reversal not only happened right as the market opened, but as Asia closed up and as Europe has come in, they've really taken copper down. I think that's worth noting. Crude oil also trading heavy as well. Crude, rallies have been very, very shallow. And, if you look at this from a technical point of view, I guess we can draw it out right now. This is it's more of a bear flag pattern, if you ask me. And so with all these tensions in the Middle East, that this may not have a direct effect on crude. I don't know if, it's always been one of those conversations we've had, like literally for the last, several months. Do you buy crude because of risk off, or, if there's going to be a slowdown in the global economy, does crude stay pressured? And as of right now, it continues to stay pressured. Maybe it's from a global growth point of view. like I said, copper and crude really have me concerned about trying to chase risk higher. Speaking of risk, if you look at the S&P, we'd been following, and I had it drawn out like this, and just so you guys can see it, we had a wedge pattern, and we'd been talking about that last week. We had a wedge pattern, broke out to the upside, and then we came and broke this trend line support, which now opens up a move back down to this 5680 level, which is going to be that's where the rubber meets the road. I mean, that's where where the market is bullish. That's the bullish breakout point. I think we go back and test it at some point this week. Now that we've broken below it, the question is, are we going to be able to hold it? And let's not forget, we are just a few weeks away from a presidential election here in the U.S. I know seasonally speaking, it's a really great time to be in the equity markets, but seasonality has, I don't know if it's really playing as big of a part right now. A lot of people were expecting we were going to have, pullbacks in equities, so seasonality didn't really work this year. What's to say seasonality is supposed to work this year? Oh yeah, we're going into a presidential year, but yes, it was also one of the most contested, or probably one of the most heated presidential elections might be in U.S. history. So, and we all know going into it that no matter who comes out victorious from a voting standpoint, the other side is probably going to contest it. So that's something else that we need to be thinking about this year before getting wrapped up in the seasonalities of the market. One of the last things I want to mention is Japan, and I'm gonna lean on Ryan here in just a second. So the dollar yen came under pressure on Friday, and if you watch the week ahead video, I discussed a lot of the reasons why, and you can see going into Thursday night, the market was expecting, or at least hedging, for a potential win from the female prime minister, or possible prime minister. Sorry, she was going to be Takashi, I believe her name was. Anyway, she lost the runoff against the Shiba, and we saw the market reverse. Traders put that yen back on because she didn't win. And then also at the same time, we had end of month flows. We do have end of month flows, which we're expecting predominantly yen strength. So I think that was feeding into this as well, because traders are like, oh shoot, I gotta buy yen anyway. Not only do I have to take my hedge off, I have to buy yen just from a flow point of view. And so I think that kept us pressure going into the end of last week. Now, as you can see, the market, once the market reopened, we had a recovery up towards 143. I was actually long some dollar yen over the weekend. I sold mine. I was long at the 142 and change. I sold it last night. If you're in the ForexAnalytix chat room, you can go to the trades room, and you can see where I pulled off my dollar yen last night at that's dollar CAD right here. Dollar yen at 142.80 is where I exited my position. And it came off, and it sold off back below 142 last night, or in European trade. Now, there were some comments that came out of the new or incoming prime minister, Ryan. What were the comments that came out that kind of moved the market last night?
It wasn't really anything he said that moved the market. I don't think. He is calling an election for 27th of October, dissolving Parliament 9th of October. He did repeat the line that got the market in a bit of a flat Friday, when he said that the monetary policy should remain accommodative. That's not to mean the BOJ should be dovish, but that they're not going to be hiking 25 pips every month from now till next year, sort of thing. But there wasn't much in his comments that sent it low. I think it was, again, maybe some last month end stuff, because obviously it's the final trading hours for Asia overnight. So maybe they were just some last minute end of month stuff going through, but it was a pretty significant bounce off that zone. I've got exactly the same zone, 142 down to 141.70 ish, and it was a healthy bounce off of there. I've been buying it since 143.67 down to 142s. So I'm looking for this to maybe rally because yields are back up again as well. They're just ticking higher in twos, ticking higher in tens, continuing that sort of bounce off the lows that we've seen in those. So yeah, I've been thinking that dollar yen's a bit of a dip buy. I just wasn't expecting to go as far as it did before it started bouncing.
Right, and you know, well, let's talk a little bit about this in the 10-year really fast. I'm going to actually go out to a daily chart. One of the things that really has stood out to me, you know, you look at the 10-year. We've had this really nice recovery in the bond market, obviously. You know, now you got, you know, notes like the 10-year note and the actual bonds, the 30-year. They're actually pulling back now. Very divergent relative strength, and if you think about that from a risk aversion point of view, you know, if traders really want to lock in these higher yields, they're going to start doing it soon. Especially look between now and the end of the year, and you're like, you know, there's some risk coming up. Why wouldn't I want to lock in, you know, a 10-year yield at these prices? And so I really, you know, watching this, you know, the yields on notes here. I mean, if the 10-year gets much above like 383, I mean, we're probably going to trade back above 4. That would be my best guesstimate. So you're right. You got a rise in yields, and I want to point out something key technically that I think is really important with the dollar yen. I think people forget about this just because, you know, so many day traders are you know, they're so focused on the hourly charts and the 15-minute charts. You sometimes forget some of the longer term components of this. And I'm going to take you out to a weekly chart really quick in the dollar yen. And let's zoom out. And this is, and I'm going to show you from 2021, the lows here. That's a 38% retracement. That comes in basically just below 140. If you look at the last, you know, this last leg, which is basically the 2023-2024 range, that is also a 618 retracement, comes in around 140.50. So these are really critical levels for the dollar yen to hold around the 140 level. I am and you can see this trend line right here that comes through all the way from 2021, comes in right around 140. I am in the camp that if we break below 140 in any significant way, it's over. Like you know, the dollar yen is going to be trading in probably the lower 130s. And I do expect that to happen at some point. I don't know if I expect that to happen right now. And what we don't know at this moment is how the dollar yen is going to really move the market, or how the market will really move the dollar yen if there is some risk aversion. But we saw some risk aversion this, you know, over the weekend, what you would think would be risk aversion. And we haven't seen any response in the dollar. You haven't seen any response in the yen. Even gold's come off. So I don't know, Ryan. I mean, you know, what are your thoughts here? I know you're buying dollar yen at these levels, but do you see what I see as far as very critical supports down here?
Yes, mate. I was looking at those a few weeks ago. They've been on my chart for a long while.
Yeah.
That 140, 139 area. Yeah, I think we're setting up a bit of a range potentially 140, 139 up to 147, because we're over the excitement of the Bank of Japan. We're over the excitement of the Fed cut, and whether it was a 50 and a 25 and everything. So yeah, I can see us seeing a bit of consolidation now, trading between the data points, big ones like the NFP this week, and seeing where the range is going to develop. But I can't, unless something meaningfully changes in the data, I can't see us breaking down through 139 or above, you know, 150 as a maximum, because it's going to take something big, you know, inflation ramping higher, you know, a 400k NFP and unemployment at 3.9%, you know, or on the flip side, it's going to take, you know, really negative data to get us going through that 139 area. So I think we're potentially setting up a range. It was good that we got a confirmation of that low around that fib. You know, it came up about 20 pips short, but close enough for government work. and that's a nice confirmation of the level down there. So it needs to be respected if we go there again.
Yeah, and I want to mention this, and then I'm going to bring in Steve really quick because he's had the weekend to really take a good technical look at some of the markets. So I'm going to ask for his input here in a second as I wrap up what's happening in this yen. But I've been, I have to reiterate this, something that I've talked about for the last couple of weeks here on the F.A.C.E show. If you listen to a lot of these, macro tourists that are around, especially Japanese yen macro tourists that are around, everybody's bullish yen. Everybody's, bullish yen to the, how do a lot of traders call it, balls deep. They're just like, oh yeah, it's going to create the next, the next crash is going to be caused by the yen, which they could be right. I don't necessarily disagree with them. I disagree more with the timing and the fact that everybody's trying to lean into this long yen trade. I actually believe that yields are going to pop with what you were talking about, Ryan. And I think the risk lies where the yen would actually be more at risk near term of a rally towards 147, 148 first before actually rolling over. And so I'm going to be looking to play it that way as well myself. And Ryan, before I bring you back, I'm going to go over to Steve, but, think about any other major headlines that's really moved the markets in European hours or that you saw over the weekend that you'd want to mention to the folks here at F.A.C.E. But let's go over to Steve really quick. Good morning, Steve. How are you? He's muted, by the way. You might be at the beach.
Oh, okay. Can you hear me now?
I can hear you now.
Okay. I'm good.
So you've had an
How have you been?
opportunity to take a look at the markets over the weekend, even as you are beach bound. What have you noticed technically that's gotten your attention over the weekend?
Nothing really has changed. We somewhat avoided a breakdown in the dollar last week. But in my opinion, the dollar remains extremely heavy. It's more than obvious on the charts. And equities remain very well bid. And we even had this big reversal in the yen. I know the reasons were purely political, but it doesn't really matter because, it doesn't really matter what creates a technical move. We got that happening, right?
Yep.
So I think we should keep looking exactly, in the same direction we were in the prior week. That's what I think.
All right. So, well, let me ask you this.
And by the way, I think this is a great catalyst. I mean, I mentioned it, but just to make sure it's clear, I think this is a great catalyst for the yen pairs to produce another leg lower, right?
Okay, so you think they are going to have another leg lower, and that would be.
I think it's extremely likely, given the move that we saw. Yes, it's extremely likely.
Okay, so this is where you and I are going to differ near term, as we were just discussing about yields. But you believe that the yen's going to have another leg lower. So where would be your break point for the dollar yen if to signal, hey, it's starting? There's no need to even be buying dollar yen anymore.
I think we need to look at this oppositely, meaning I think we have to look at it in the following sense. As long as we trade below the 145 area, because I have a descending channel there, I see no reason why we would want to be bullish. I think we should be bearish against that.
Something that looks like this, I'm assuming. Okay. Let me go ahead and clone that real fast. So I'm assuming you're looking at this right now, and you're basically looking at something in that fashion.
Yes.
Yeah.
Exactly.
Okay. All right. So there you go. You got the word from Steve. As long as we're staying in this descending channel, he's looking to trade on the short side of the dollar yen. So Sounds good. Now, this week, remember, we do have non-farm payroll week, and it's not just non-farm payroll. We're going to have so much data that's coming through. It's, we have both ISM data coming through. Do we have weekly unemployment claims, JOLTS? There's going to be a lot of data components, obviously, in the ISM that the trader is going to be looking at. And then we have an incoming government in Mexico coming in tomorrow. I think inauguration should be tomorrow. We had the Fed chair who is speaking today, and he's participating in a discussion called A View from the Federal Reserve Board, which obviously has probably something to do with monetary policy. So we're gonna have to keep an eye on what and be, keep our ear to the ground on what the Fed chair has to say. Even though not a lot, we haven't seen a lot of data since the FOMC, it still doesn't mean that he's not going to, say something that could move the market. Steve, you live in the Eurozone, obviously in Greece. We get the Eurozone CPI this week, and you can see how the euro is trading really quite bid. I mean, we're at 112. We have this bull flag pattern, a nice consolidation at the highs, which that tends not to be bearish when you're consolidating at the highs like we are. What's your feelings about the euro here, especially with CPI coming out later this week?
It's clear that 112 is a key resistance. We've been testing it for days now, right? So, is it possible to advocate for somebody to be buying the euro here? The answer is no. But on the flip side of that, we have a sequence of higher lows.
Yeah.
And as I said, despite it not having happened yet, it looks to me that dollar remains extremely heavy and vulnerable. So on the other hand, I think it's a very tough call to be short the euro or anything against the dollar at the moment. Now, obviously, I'm going to state the obvious. I cannot guess the number, right? I cannot guess what the CPI is going to be. In general, the CPI has remained in the Western world sticky, slowly pulling back, but sticky, right?
Yeah.
And we've already seen that central banks are inclined to ease, even with the CPI being a lot above target, right? So I'm not very optimistic that central banks are going to even respond to a sticky CPI, right? I mean, initially the markets will assume so, but I don't think it's going to happen.
Got it. Well, it'll be interesting if they're like, well, our new mandate is 2.5% versus 2%. So hey, real quick, I
don't think they're going to do that. First of all, they have no reason to do it because they ignore the mandate anyhow. Second of all, the moment you do that, then the market is going to assume that next your target is going to be 3%, and after that perhaps 3.5%. So in essence, the moment you do that, they've done it, right? They've done it already, but in a way that mathematically speaking is not that obvious. I remind you that initially when the 2% was put on the table, it was put on the table as we want to be below 2%. Afterwards, we want to be below 2% became we want to be below but close to 2%. Then the 2% became we want a symmetrical 2%. By symmetrical meaning, okay, we can be above it as long as we can be below it as long as we compensate afterwards, or the opposite, which of course they didn't keep. But the reason they've clearly avoided in moving the number is because once you change the number itself, then there's no number.
Right. And well, yeah, they can't do that. And then inflation expectations start to rise. And then that's what,
yes,
inflation is a genie. They always talk about the genie in the bottle. It's because it is more of a psychological thing. Inflation is because everybody makes it that way. You start raising prices, and it's a snowball effect. And hey, Steve, I appreciate your commentary, really on inflation too. I just wanted to bring Stelios in because I know he's here, not feeling well, but wanted to chime in. So
Me too.
thank you, Steve. Stelios, hey, from your point of view, what's aside from not feeling so well, what are you looking at right now?
Well, I always look at the big picture, and I'm really happy you put up a daily chart and even a weekly one a few minutes ago. Anyway, the
Of
main
what?
pic.
Oh,
What
right
was it?
here?
The dollar yen, right? You showed the daily chart. Anyway,
Yes.
what was it? I can't remember. Anyway, my view is that um, central banks are easing. Inflation is dropping. Yes, slowly, but it's dropping. Today we got German CPI at 1.6% year on year, HICP at 1.8. So it's below target, and we are getting the Eurozone number tomorrow, is it? I think. Um, but for me, the main pattern still is that we are easing, and easing is always good for risk, good for equities, good for everything, until we get some kind of a um, you know recession, or so, God forbid, a strong big recession, then everything changes. So for now, what we're seeing today is a correction. um, Again, if you put a gun to my head, I will buy the S&P. I will buy everything, because I think that's a trend that still remains. Yields, you talked about the 10-year, and that is important because we did bounce off the lows at 360, and I was always talking about this 375 to 380 area being pretty important. If you go on a daily chart, it's easier to visualize. And I think you correctly said if we do break above this trend line that you have at the top, then we're gonna be heading towards 4%. But I still think that this will eventually be resolved to the downside. Um, so even if we do break above and go towards 4%, that is going to be just a corrective move, and I think we'll go lower. And it's a similar story with the Dixie, um, that is trying to make new lows now, and I really don't see what um, is going to prevent this. Yes, we could bounce, of course, a little bit. I mean, we might not break it straight away, but I think the direction is lower in yields, lower in the dollar, higher in risk, and that for me, the thing that cemented this was the 50 base point cut by the Fed. And yes, they were talking about, oh, we do one now. It doesn't mean we're going to be doing more 50s, et cetera, trying to kind of cool the market a little bit with its expectations. But what they did is do a 50, and that was the main thing. So I still think that this is the main trend. And yes, of course, we could have corrections, but that's a trend.
You know,
So
Greg is actually looking for a little bit of a correction here too. I mean, when you talk about, let's talk about the jobs data that we have this week. And by the way, we don't have data until Chicago PMI a little bit later this morning. Everybody's been trying to bet against the U.S. economy forever, as far as I can remember, myself included. I mentioned in the week ahead video, I'm like, everybody thought and still thinks that the U.S. economy is going to, slow down. There's going to be a recession at some point. But data has continued to be really, really sticky. And when you're talking about this month's jobs data, or last month rather, are we going to really get a weaker jobs data? I mean, could that be the catalyst that throws a bid underneath the dollar this week? I mean, what are your thoughts there?
if you mean if we get a stronger jobs
If we
data.
get stronger data, I mean, we get
Yeah, yeah,
stronger
yeah, yeah.
data once again, everybody's like, shoot, we're never going to get a recession here in the US,
Yeah.
or
Well, I think you're right. I think you're right because the Fed's dual mandate is obviously inflation and employment. And inflation, they can assume and take it as a win. It's coming down towards 2%. It's almost there. So the main thing now is employment, and that's the main danger. So if we do see a big number in the NFP, a big beat, then definitely that's going to give a bit to the dollar and, a little bit risk off. Maybe, we see a little bit of an unwinding of the recent trends. But remember what happened with the revisions. Of course, this is months away again, right? 6 months away or so, where they revised away about 1 million jobs. So, we have to remember that the number is kind of partly made up, but this is what we have and what we trade. And if the number is strong, then yes, I think we're going to see a bounce in the Dixie towards those previous highs. 10. We could even get towards 102. Yeah, why not? I mean, 102 is a very important area that's been tested quite a few times.
Yeah, I think it's obviously, I still look at the dollar index as a big triangle breakdown, but at the same time, this is a really, really big range of support here. And ahead of a presidential election, knowing there's some, potential risk aversion along the way, it's really hard for me to lean into the dollar super short right now unless we start to see a massive breakdown in data. Hey, I'm bringing on James Anderson. He's a big precious metals guy. I've never interviewed him before. Dale told me that he's obviously a really, really a great person to talk about precious metals. Stelios, you are a precious metals bull, so I'm sure you're going to want to hear what James has to say. But before I get to him, I just want to go around real quick. Ryan, any last minute thoughts that I didn't get to come back to you, but any last minute thoughts before we wrap up things here on the F.A.C.E show?
Yeah, just keep in mind it's still end of month, end of quarter. We're still seeing some flows going through, and obviously we keep eyes peeled on power later.
Pal, and we have a new incoming Mexican government. Woohoo! Woohoo! All right. And Steve, it was really nice getting your thoughts from the beach today. Any last minute thoughts before we go over to James?
No, not really. I mean, we have a lot more to cover in the morning edge afterwards when we go into detail.
Yes, and speaking of which, thank you very much, Steve, for the reminder. Speaking of which, today is the last last day of September, last day that you'll have the 8-year anniversary sales. Although we have had some requests, because tomorrow's the 1st, a lot of people's paydays come around. So, but for right now, this will be the last day. We might extend it a couple of days. We haven't made the decision yet. We've just gotten a few requests. So, but make sure you take advantage of these prices because you guys know this. Once they're gone, they're gone. But if you want to be in, utilizing the ForexAnalytix system, seeing all the analysis of 30 different products, not just currencies, but having this, trade suite of tools, whether you're talking about the live squawk feed, risk management tools, chat rooms, in here talking to all of us, and you can have 15 hours a day, every day with Ryan. I mean, who wouldn't want that? You can do it right here in the ForexAnalytix community, right, Ryan?
Absolutely, mate. Absolutely.
All right. Thank you, Stelios, Steve, Ryan, for joining us today. We will be back.
Thank you, guys.
Steve will be back on the Morning Edge, which is a private show for ForexAnalytix subscribers. I'll be there too in 45 minutes. But first, let's bring in Mr. James Anderson. Mr. Anderson.
Yeah, hello. Can you hear me?
Hello. How are you? My name is Blake. Welcome to the F.A.C.E show. How are you? Good.
Thanks for having me, Blake.
No, it's nice to have you here. Does anybody run around and call you Mr. Anderson from the Matrix?
Yeah. That's a standard go-to. That's a good one.
It's gotta be. It's gotta be. Anyway, nice to meet you. Tell us a little bit about yourself. I know Dale prepped me a little bit that you're a precious metals guy. Tell us a little bit about yourself and how you got in the business and why you do what you do.
Sure. So I was living in Southern California in roughly 2006-07 and was investing in precious metals to the point where, I was spending so much time, I figured I might look in the industry and see what kind of opportunities there might be. I was in my late 20s at the time. I was kind of getting involved with the Ron Paul revolution around that time too. So there's kind of a bend toward hard assets in that camp. And so I ended up running into a company and working with a company that was an upstart, working out of a house in the beginning and then building it up to a substantial size precious metals company. And So I've been in this industry pretty much for the last 15 years or so. And a lot of the fundamental reasons for why I was buying precious metals back then are stuck around, and they pretty much have been panning out, just taking a lot longer than many had thought.
Oh, okay. You're finished. Yeah. Well,
Trade.
I've been obviously trading around and watching precious metals since, the 90s.
Yeah.
And I remember one of the smartest guys that I've hit, one of my business partners at the brokerage firm that we started in the late 90s, in 99 actually. I remember gold was trading around 315. He's like, I'm buying a shit ton of gold here. I'm like, why? I'm like, after it just came down from like, what it just came down off of, massive levels, over the course of the previous couple of decades. And but ended up being pretty much the bottom. And yeah, we've seen precious metals really skyrocket and over the years. And Stelios, who happens to be here right now, he's been a adamant buyer of precious metals. And Stelios, if you want to chime in and tell James why you feel like in your bones that precious metals need to be going higher, and they
I'm
have been.
I'm not buying at any levels. Obviously, I try to pick good spots to scale in, scale out. But for me, it's very simple. It's as long as the supply of money and credit keeps going exponentially higher, especially in the last 10 years or so. Mathematics 101 says that metals should continue. Of course, nothing goes in a straight line or keeps going forever. So, you pick your levels. People who have been on this F.A.C.E show last week, they know on Thursday I let go of some of my silver. I've got my bids in at 30.60 now. So scale in, scale out, and but that's
But
my main plan.
and thank you, Stelios. Let's hear from James. Like, do you feel the same way? And what's really pressuring precious metals higher, and what will make them go higher in the years ahead?
So there's a lot of factors. I think his point.
James,
Is it me or we lost him?
no, we lost you there, sir.
Can you hear me now?
Yeah, and you may have been
Yes.
talking a little bit earlier that the same thing might have happened to you. You were talking, then you stopped. That's why I started talking again, because I think you're cutting in and out a little bit. I might have cut you off inadvertently and not known it. So
No problem. Yeah, so the combination of a bunch of factors, it's a confluence of many. It's setting up to be what I would argue is going to be the biggest gold bull market the world's ever seen. But this is going to be probably another 5 to 10 years to fully play out into a mania phase. And gold ultimately will become the ultimate bubble, the last final bubble. And
we lost you again,
It's
James.
breaking up again.
early days, I think it's going to go much higher over the next 5 to 10 year time period. But in the short run, the ability for gold to run to 3,000 this year is certainly in the cards. You have a situation where central banks are buying clips they've never bought before over the last 2-3 years. They're essentially, a lot of these central banks are moving out of the bond market and allocating into gold bullion, treating bullion as bonds.
James, you're kind of cutting out every once in a while. It's like you're talking, and then all of a sudden you
1980,
stop. Oh, are you there?
Yeah.
Yeah. Okay. You're kind of cutting out from time to time, so that's why
Yeah.
I keep jumping in. Sorry about that.
No problem.
So let me ask you this: you're a dealer, correct?
Yes.
Okay, so let me ask you, just because I have a local dealer in Scottsdale that I use. I'm not going to name their name right now, although it's got the name of my city in it. But anyway, that doesn't really matter. The thing is, I wanted to ask you a couple of questions. So, what's demand for physical like, and how difficult is it to buy physical gold or silver bars nowadays? For and your mic is cutting out again. James?
Yeah.
Okay. I can hear you though. Okay.
No, we're losing him.
Yeah, I know. Unfortunately, we've lost him a little bit. James, are you still there?
Yeah, I'm here, but this seems to be happening over and over. It's going to keep happening. I might have to reset everything. Maybe we plan another.
Yeah, first of all, I'd love to have a conversation with you. More just especially as a dealer. I think there's a lot of demand out there from traders, traders like myself. It's like I like to put away physical, not just trade gold, whether it's futures or whatnot, but I like to put away physical when I can. I think a lot of people want to know what the demand's like. How easy is it for the average person to run out and get access to gold and silver? And I also wanted to ask if like the moves by some of these big box retailers like Costco, if it's changed your business model at all. So let's see if you can try to speak a little bit here, James. He has logged out. Yeah, little log out there. Unfortunately, I'm going to see if he pops back in. Because I think it's really interesting. Because Stelios, when's the last time you went out and tried to buy physical?
Oh, a long time ago.
Yeah, I mean
Long
it's
time
been
ago. About
it's
4 years.
yeah, it's been about 4 years since I bought physical last. Which when gold was trading at 1,700 and silver was trading at 18 is the last time I went and made a real significant purchase. It was easy to do so back then. I just don't know how easy it is to do it today. Have you tried recently? Steve, have you tried it?
I have not. No,
Okay.
I have some old gold coins from the family, but I do most of my trading via ETFs.
Yeah.
So, but yeah, I think James was right. You have central banks buying the last year or two in big amounts, and you have this global uncertainty brewing. In the Middle East, everywhere. This you know p- potential for escalation always gives a bit to metal, especially gold. And we've talked about this so many times. Silver is an industrial metal. Everything that gets created now, solar panels, EVs, everything, they use quite a bit of silver, which, from what I understand, physical is in a deficit over the past few years, production versus consumption. So, everything is there for metals to, especially now with rates going lower as well. And inflation going lower, and central banks cutting. So, everything is there for metals to continue, and we have to admit that both gold and silver this year have done well.
They have.
But
Well, let me ask you this. I mean, we had obviously the headlines over the weekend about Hezbollah's leader. I thought that would have hit risk a little bit more than it has, and I thought we'd see a bigger response. Not necessarily. Well, equities are down slightly. I mean, is that the reason why equities are down? We could argue it maybe it's copper reversed a little bit, but we haven't seen a bid in gold. We haven't seen a bid in the dollar either. We haven't seen a bid in yen, which, those are the three things that I thought if we have a little bit of risk aversion, we would see, but we haven't. Any thoughts about some of the headlines that hit us over the weekend?
I don't think the markets have moved on the back of these headlines at all.
Yeah. All right. Well,
Cryptos and metals today, I think, is just a pullback from the recent really strong moves. Because if you look at the yields, you look at the dollar, like you said, even equities, S&P's plus or minus 0.5%. So I don't think we've seen any reaction to those news in the markets yet.
all right.
Maybe
Well,
people are waiting for an escalation or something, but at the moment, I don't see anything.
It's just like old times with we missed James. I'm still looking for him to see if he'd pop back in, but we do have me, you, and Steve here, just like when we originally started ForexAnalytix. So, Steve, hey, any thoughts on precious metals from the beach before we wrap things up today? You're muted, by the way. There you go.
We are clearly in a corrective move, right? a very, very short-term corrective move I'm in, consolidating mostly the recent highs. We have a sequence of higher lows for quite some time. Gold is hitting almost on a daily basis on occasion new all-time highs. Silver last week produced an intraday 12-year high. What else should I say?
Yeah, we hit a high in silver that we hadn't seen in 2012. Actually caught a lot of headlines. I saw headlines all over the map. We've actually reversed a little bit from there. This is where I get concerned about silver. I think if we start getting much below $30, that's where, anybody who's long or, chased it higher is probably going to be like, oh crap, I bought the high. You know what I mean?
I agree with you, but instead of discussing, what should happen in order for us to turn bearish, I think we should, discuss the obvious, right? That we should be bullish until proven otherwise, given what has been happening.
Or look at levels to where you could be a buyer. Like in this case,
exactly. To join the trend, yes.
Yeah, silver comes down, then you probably want to be a buyer close to the 200 DMA or near this support. And I think, but then you have to think about the implications of that, because if we do see a move like that in silver or gold, what's behind it and what's coming behind it is probably some strength in the dollar index. So you got to put two and two together in this market, because everything is interconnected in these markets, it seems like. And with that being said, we're going to try to catch up with James. I'll have Dale reach back out to James. He was having a bad connection, but it seems like a really interesting guy to have on F.A.C.E. I know it hasn't been his first time and it won't be his last. And I want to thank everybody for being here with us today. Remember, take advantage of the ForexAnalytix anniversary sale. This is your day. This is your time. And you know what? We're going into the most volatile time of the year in an election year. You want to be in a community where there are traders that you can talk to and don't have to worry about being trolled, and you can have conversations with and bounce ideas off of, and you can, I'm literally there like 14, 15 hours a day. You can say, hey, Blake, what do you think about this? And I'm there to answer those questions for you. So it doesn't make me right or wrong. It just, hey, having a different point of view and having, somebody who's been in the markets for nearly 30 years, why not have my opinion with that alongside not just myself, but the rest of our team as well. So be involved with the ForexAnalytix community, take advantage of the prices. And with that being said, Steve, Stelios, just like old times, nice having you guys here. And everybody that's listening in, thank you for listening to us or tuning in today. Tomorrow and all week, it's going to be a very busy week. So I expect to have you back here tomorrow as well. We will also have Patrick from Bad Charts. He'll be here tomorrow. He's already confirmed that, and he's looking forward to meeting with me and you, but me asking some questions, I guess. So I'll look forward to seeing you guys tomorrow. Thank you, Steve. Thank you, Stelios. And thank you,
mate.
Thank you, folks.
Thank you, everybody.
All right. You guys all have a great day. Good luck today. And we'll see you, those of you that are ForexAnalytix subscribers, see you in about less than 30 minutes on the Morning Edge. We'll see you there. Bye-bye.